What's up, guys? It's Trades here, doing a post-market analysis for the trades that I took after CPI release yesterday, which was the 10th of October, Thursday. Going into the week, strong bearish order flow, and I was bearish going into the week. Monday, Tuesday, and Tuesday I took a short. I was expecting price to come and tap that daily time frame fair value gaps 50%, which it didn't, but I got the entry before that, and I took the short. Because of CPI, I didn't really aim for the low or the order block, because I thought maybe we'll pull back once more. But yeah, this is how Wednesday closed. And on Thursday, before CPI, I was just waiting for CPI to come out and make a decision afterwards. And going into today, I was watching these point of interest. So this daily time frame fair value gap was one, and the weekly time frame order block was there, and also we've got this daily time frame sell side liquidity. And this is how the 5 a.m. candle closed after CPI release. We had this strong bullish engulfing candle that took liquidity off below and above this range right there, right? We had price come down to the weekly time frame order block as well, tap into that order block just above that 1.09 level, and put in this candle, which usually would indicate bullish momentum. This is where buyers come in thinking, okay, we took out liquidity, now we're going to continue higher up. However, from experience and just analyzing the market for a while, I've noticed, whenever you get a candle like this, it's likely going to pull back first and then continue higher, because of the fact that we are in a bearish order flow on the weekly time frame. However, because it's a Thursday, it's come into a high time frame point of interest, it reduces the probability of it being bearish. Had this exact scenario played out on that Tuesday, I would have been so much more confident of price continuing lower, but because it was Thursday, I was slightly hesitant. This is how the 1 hour candle looked, and I took the entry before the close of this 8 p.m. candle, so before the close of this 4 hour candle, because on the 5 minute we had this doji candle, right, just taking out liquidity. First it took liquidity off the low, and then it pushed up, and then it started to pull lower, and then it looked like it was going to continue higher up, which is essentially what it's doing, is trapping buyers into the market thinking it's going to continue higher. And I took a short at this retracement, at a 618 retracement at this level. Should have waited, or could have waited for price to hit that New York high. I gave myself quite good breathing room as well, mainly because I put my stops up there, and I wanted to target this order block on the weekly time frame. However, it's one thing to enter a trade, and it's another thing to stick to it. And as price started to print on the 5 minute time frame, I saw price come down, putting this candle, taking out the fair value gaps right there below that order block, continue higher. Now everyone's thinking, well, I was thinking as well, that price is going to go and take out liquidity up here. However, I'd given myself enough breathing room above these highs. So even if price was to take out this liquidity, ideally I would expect price to not go up to these highs. And because of that, I was a lot more confident that we were going to find resistance, at least at this high of the news as the CPI candle high. So I let the trade play out until it came down to there, and then I closed the trade because I wasn't really confident anymore. And then I started seeing this afterwards, which is exactly what you'd want to see, is displacement. Price comes up, holds his fair value gap, displaces, and then we get a pullback into that New York open. We should get a New York open. No, we don't. And then we get another displacement, right? This is the market structure shift displacement, closes below these fair value gaps, retracement into the 618, and then we drop down. We might not even drop, I would have taken targets off at that order block, weekly time frame order block, and then price pulls up, and then tanks. We get a 618 retracement again. Yep, another 618 retracement, and then drop. and then price finds support, and this is another good level to go long. But because it's 1 p.m, it's too late in the afternoon or in the evening in UK, so it's not really a time that I look for trades anyway, so I wasn't looking. But yeah, my main mistake here was the fact that I entered way too early, as in I entered on the pullback off this candle. We should have just waited until price, provided some kind of a hint of displacement and then entered on the pullback. It's just that because I've tested this on a Tuesday rather than a Thursday. On Tuesday, whenever I've seen something like this, especially in a bearish order flow, we will just see price, put in a candle like this, and then it will pull back somewhere, either sometimes take out the highs or sometimes into the middle and then displace lower and then do something like this. And I was just trying to catch the pullback at the peak. Maybe it's not the best idea to try to catch the pullback, especially when the news is out and everything's so, moving so fast, and it feels like you just have to be in the trade no matter what. If you're not, then it almost feels like you're going to miss out, and that is exactly what it is, fear of missing out. And then we got this setup, which is something that I've tested anyway, just not on a Thursday. That's one of the main reasons I was a little not as confident in taking this trade. And then we get the displacement and then price comes lower. Similarly on pound dollar, we see this, but we don't get that liquidity grab on pound dollar. We just find failed retest and then we continue higher. Not up to this high yet, but yeah, I think one of the key thing here is the fact that wait for price to push up, either take out those highs and then drop, close below the open, which is, I believe, is key right now, right? This open right there with some displacement as well, hold, and then market structure shift again, provided a perfect entry because I closed by that. So the thing about taking low quality trades is it's mentally draining. Watching something that you don't really know, and especially if you're like me, sit at the computer and watch the trades, every move is absolutely mentally draining, to the point if you see another opportunity, it just doesn't even register in your mind to take it. Well, for me anyway, and that's something I need to get used to. It's either miss the trade or only take trades that actually make sense, especially when we see something like this, just because it's mentally less draining. Waiting would take less energy in terms of your mental capacity than it is when you just enter a trade and the energy just saps away. But yeah, that's the post CPI play, and let's just do pound dollar as well quickly. Similar to euro dollar, going into the day for pound dollar, I was watching these point of interest. So the daily time frame order block, the sell side liquidity, and this daily time frame fair value gap. Potentially predicting maybe we'll come up to this level, find resistance, continue lower, or find support somewhere around here, and then continue higher up, and then continue lower to take out that sell side liquidity. So yeah, essentially we'd come into this fair value gap right there. Right, there's a fair value gap here, which is right above that order block as well, and prices failed to close below every single candle for the last, almost since last Thursday, 1, 2, 3, 4, 5 candles in a row. So essentially, to me, that just tells me price is bullish. We also came into this daily time frame order blocks 50%. I've been testing it. It doesn't tell me it's bullish, but it tells me there isn't a lot of prices holding this level, finding support, which is key. And on 240, we had this channel, perfect channel, right? RSI diverging, which is something I look for. And then we printed this candle. This is exactly the kind of candle that I was expecting CPI to print. And similar to euro dollar, I was watching the highs and lows and waiting for price to take out either of them to look for opportunities to trade. But similar to euro dollar, I was expecting also price to come to the low and look for opportunities to trade on the way down. So it's different to euro dollar. The euro dollar actually wicked above these ranges, whereas on this pair wicked below, took out all the liquidity but failed to take out that high. But yeah, as I entered the euro dollar on one account, And then as I saw pound dollar moving up, I entered in a different account with pound dollar somewhere around 77, which was right here. I entered around there, gave myself, again, similar to euro dollar, enough room, put it up there, around up there. And similar to euro dollar, this one, at least, price started to move somewhat in my direction. And I saw this candle holding this 5-minute fair value gap, bullish fair value gap, and that was enough for me to shit my pants. But I think I took my stops off somewhere at this order block, I believe. Essentially, I took out at 0.5%. And then after that happened, of course, the inevitable, that always happens, right? When you don't understand the setups that you trade, because it is obviously a setup that I don't really understand that well. And I just understood that, we are going to come down and take out this low. We are going to pull back into this range somewhere. We came into that order block. Ideally, price shouldn't go above these highs. These are the factors that I was certain of anyway. Or those are the factors that allowed me to be more confident with entering the trade. Not exiting, just entering. And therefore I was able to enter, and I was okay with price pushing up and into a small drawdown, because I had a bit more confidence that price wasn't going to continue higher. Similar to euro dollar right now, oh my god, it's such a perfect setup. Rejected New York Open, displacement, and similar. And I even took another trade after I closed that trade. I put my entry at 618 pullback of this range as it prints out. I believe there's another candle that will, yep. I put my entry at 618, which hit entry to the T, put my stops again up there, give myself enough room. And I was like, I'll take 1-to-1, I'll be happy with it. And then I exited the trade as soon as price started moving in my direction, because it's similar, fear of missing out or fear of losing. It's just uncertain on the trades, which is, again, now it's happened to me once because I've not traded this before. This gives me a lot more confidence going in the future, especially if I just wait for price to, start displacing lower, hold the open, daily open, New York Open, and then displace, and then look for an entry. But unlike euro dollar though, exactly, this is why you can't really trust and aim for the lows all the times. After seeing this swing and the price pulling back, again, another entry around here. Honestly, you'd have to move your stops to this level, or at least take targets here and then move stops to break even. And yeah, that was another trade for pound dollar that I took, which honestly, I could have had 2 good trades, but I need to understand these trades better. And now we are currently trading like this. Again, I'm expecting price to come up and take out these highs. It's a Friday, and we got PPI coming out in an hour. I want to see price take out liquidity off this low. Essentially, we took out liquidity off that low. We, wick below that, and then we're pushing up. I want to see pullback, and then we can see maybe continue higher up, or maybe price is coming down and going to shoot all the way down. Just gonna have to wait and see how the news plays out and take it from there.